Hello, everybody, and welcome to the NextGen Planners podcast. My name is Amelia Hamilton, and I am the head of community here at NextGen Planners. And in today's show, I am very excited to be joined by Bimpe Nkontchou. Welcome to the podcast. How are you?
Very well. Thank you, Amelia. Thanks for having me.
Oh, it's an absolute pleasure. And so to kick things off then, the question that we like to ask everybody on the podcast is, what does a day in a life look like for you?
Right. Well, they sort of open my eyes about 6:30, at 6:45. I have a Labrador, a lovely little animal. So I have to sort of go downstairs, open the door I have a little back garden, so she can go out and sort herself out. And then I make a coffee, and then I have some quiet time. I sort of sit and do my devotions, and the house is quiet. I do have my family live here with me, but at least during that time, I'm the only one awake. So I have about 30 minutes to just, say prayers, meditate, and just, be grateful. And then depends on what day of the week it is. I have a yoga session online twice a week from 8 a.m. to 9 a.m. A one-to-one class. So if it's a Monday or a Friday, I'll be heading into yoga. If not, I'll be heading for a long walk in Hyde Park. If not, I'll be on my Peloton. So I do an hour of exercise. And then after having had coffee, exercise, dog is sorted, I then, get myself ready, and I sort of hit my desk about 10 a.m. And I find it's sort of more civilized, because now that I work from home, I think the tendency is now that we all I end up working long hours. I'm at desk, till 7, 8 p.m. easily. So I thought, well, why not give myself, the luxury of starting the day gently, until by the time I get to my desk, I feel I've done, things I want to do, and I'm not sort of enslaved myself to my desk. And then I start, get to my desk about 10, and the day just passes in a blur. And often, if I do have anything to eat, it's a very quick snack, sort of about 2, 3 o'clock, because I find if I do eat properly, that I'm going to feel sleepy. Yeah. And then my day ends about 8 o'clock in the evening. So that's my what it looks like. Yes.
So I mean, that's amazing to have so much kind of respect for your own time and what you need in the morning. Is that something that came after lockdown, kind of working at home more, or was that something that you were doing beforehand?
It came after lockdown. I mean, beforehand, I'd be, when like I said, my children are young adults. So in the old days, it was getting the kids ready, doing a school run, and rushing off to the office. And before lockdown, I didn't work from home, so I'd be again getting ready. I'd squeeze in some exercise. I had a personal trainer twice a week, but that was all. I didn't sort of stop to meditate or do anything. But I got the dog a year before lockdown. And I think having a
good timing. That's great timing, isn't it?
A whole year before, I didn't know what was coming. But having a dog also means you have, you're committed to looking after someone else. So it made me stop in the morning to take care. I mean, I have a dog walker, so I don't do the walks in the morning, which would have added to my time. I do walk at the weekends. But yes, I think COVID did make me feel I wanted to just have time, and we all had time to reflect. And when COVID ended, I wanted to continue to have time every day to just reflect on me, life, and just take a breath, because we all sort of catapult ourselves into our day, and then we're exhausted halfway through, and there's burnout and all of that. So that's my routine, my real routine.
It sounds amazing. I feel jealous. I think this is something I'd like to try and make more time for. I think the mornings for me are always just sleep and then get a bit of breakfast and start work. Yours sounds delightful.
I do think you probably have to wake up a bit earlier. I mean, like I said, I sort of get up about 6:30. If I'm in bed at 7, it's late, and I have to cut down on something, because my aim is to have, 2 to 2.5 hours of me time. Dog time, me time, meditation and prayer, exercise before I start my day. So I do need to be, if you got about 9, or 8:30, that's it. So I think you've got to trade in line in for doing that. And I do feel much more refreshed. I think that my health, my everything, my well-being, and then having time to think especially, when you're self-employed and building a business, or having established businesses, you do have to have time, quiet time. And I love walking. I've done my 1 hour this morning, and it's at 7:38. There's nobody in the park, and it's a great time to think and just be in nature. So I highly recommend it.
You've inspired me. I'm gonna try. I'm gonna try harder. I'm gonna try and get up early. And because you've had a life then, haven't you? Before work, you've had a day, you've had time, and then you can move on to being productive.
Absolutely. Yeah, exactly. So that's amazing. Like I said, highly recommend it. It does energize you for sure.
Definitely. Yeah. Okay, so the main reason we're kind of here today is to talk about Wealth 8, which we will do in a moment. But before we do that, I'd really love for you to give the audience a bit of insight into your background and how you've come to be where you are now, because it's a really interesting journey. So as far back as you want to go, tell everyone, what happened?
Well, who am I? Yes, well, I'm, Bimpe, Nigerian origin, and still very much Nigerian. I've lived here for 28 years, but go back quite a lot. So I grew up in Nigeria, came here for boarding school, and then went back, and I studied law in Nigeria. Did a stint here at UCL for my master's, but went back to work and practice as a lawyer. Did that for about the first 8-9 years of my professional life, and I found myself here in 1995. Getting married to a Cameroonian who in the city of London, working in finance, and London became home. So moved here, got married, raised my 3 children. I've got daughter 24, twin boys 22. But at the same time as settling down, I still wanted to work. And I have to say, in those days, and it sounds a long time ago, but this is the late 90s, the career in law was still a struggle if you're as a minority, to be honest. And I'd already worked for a while in Nigeria. I was made partner in the firm I worked in, which is still one of the top 3 firms. And so I decided to set up my own practice. So I set up a law practice here in 1998. And it was a 2-partner firm in the West End, doing things like property, commercial law, very much niche Africa. Again, giving advice to a lot of British companies or even other British law firms as to what business was like back in West Africa. Because that was my forte, so taking advantage of my background. So I'm dually qualified as a lawyer in Nigeria and in the UK as a solicitor here. Now, fast forward 17 years of running the law firm, which is called Addy & Co. And we had fun. We built a practice from nothing. We're about 18 people. We were in Aldwych and then Covent Garden. The financial crisis did hit, and that affected my sort of, wow, this is tough. And we decided to fold up my business partner, another female, a 2-partner firm, in 2013. And at that time, I'd already been doing quite a lot with wealthy African business families, sometimes litigation, sometimes probate, sometimes just helping structure new capital coming to the company from the UK. So sitting here, I had the benefit of, seeing both worlds and navigating both worlds, helping the African companies navigate doing business with British companies and back and forth. But I found that even in that space, I was always working very closely with the business owners, with the founders, with the patriarchs. And, I come from a continent that's still, I would say, troubled by this sort of development. We sometimes take 5 steps forward and then 10 steps backwards. And I recognize that, every economy is based on the livelihood of people who are founding companies, building businesses, and families and family businesses. And so when I wound the law firm down, and partly, here the regulatory and the sort of space to run a law practice became more expensive post the first meltdown in 2008. And so in 2013, we thought, right, hang up our boots. This wasn't the law practice I was going to hand over to kids. My kids were still very young and I wasn't going to sell, but I still wanted to do something where I was supporting the African business space. And so I started to create a multi-family office structure, wealth management structure, focusing very much on family businesses from the continent of Africa who had problems with succession planning for the business, with problems with estate planning for the individuals who are growing wealthy, problems with how to invest, how to raise capital, and all the, I would say, governance and compliance issues that many African companies have to deal with, where they need to be at par with Western companies. And so it's a wealth management stroke family office was, I felt, the right platform where I could do everything, other things aside being a lawyer. I could bring tax advice, I could bring, I could bring outsource services to a client base that probably had problems, accessing international services. And that's what happened. I saw the business called W8 Advisory was born in 2014. And I've been running that. And again, very much dealing with what I call HNIs, high net worth individuals on the continent, who all have second homes in London, families going through here, educating, but who want to, my clients must have a vision for the long-term financial success of their business and of their families. And are interested in, and they must be interested in governance, in tax compliance, in transparency, all of those things to become client. That's what I'm selling. If you don't want what I'm selling, then sorry. And I know Africa is, we do have our challenges, but there are many amazing entrepreneurs and business owners, and my late father was one. So I'm part of a network of family businesses. So I recognize that some of us are tarred with the brush, unfortunately, and yet people, they need to have international, advisors, and I consider myself one. So that's business has been going on, and then sitting here during COVID and just thinking and seeing where my business was going, but feeling that I really, at this stage in my life, and this is my third career, having worked in Nigeria, run a law firm, doing this, it was more about impact and also about how am I going to make a difference to this whole wealth management game, because Africa is still being left behind. And I realized that doing some research, I felt it wasn't just Africa, but people of color, minorities, even in the UK, are being left behind when it comes to wealth management. They're underserved, they're overlooked, because the traditional wealth manager only wants to talk to very wealthy people. I find that kind of strange. You wait for someone to make money, and then that's when you become the target client. How about talking to them as they're building wealth, or helping them to build good habits that will help to build wealth? Because then they become loyal clients who stick to you because you were there for them when nobody else was. So in a way, there is that, marketing element of what I'm doing. But at the same time, the reality is, wealth planning and wealth and financial planning and all of that, estate planning, shouldn't just be for the very wealthy people, because everybody is doing their best to create wealth in whatever way, whether you own your car mechanic who's got a little shop somewhere far away from London, and whether you're a hotelier who's a chain of hotels across the world. We're all building something, and frankly, the hotelier will have better access to credit. He'll have better, access to information and to services to help even make himself richer. While those at the bottom of the other end of the food chain, nobody wants to talk to them because they're not going to pay you a ton of money. So, in that respect, I thought, wouldn't it be nice to do something differently? And technology had just basically, come up and it was something I was very interested in, understanding how technology could perhaps change the face of wealth management, because it's changing the face of so many things, of car sharing and home sharing through all sorts of different things are being disrupted. And so why not this? And I went to a conference, I can't remember what the name was, but I sat at this conference and I saw the likes of Nutmeg and Wealthify, who had just been created a few years before, talk about how the digital space is the best way to scale. Because what I realized was I would like to have my services available to a wider audience. Now, of course, there's a cost to doing this face to face, and of course, the reality is, as a wealth manager, you do talk to wealthy people because your time costs money. But actually, technology is the way to scale and to create a service that becomes much more accessible to a wider audience. Maybe not as bespoke, but at least tackling some of the basic needs of that audience. And that's what I was hearing, and I was thinking I could do this for that, Black community, whether it's in the UK, the diaspora, on the continent, that I've been telling myself or realizing. I'd written lots of little articles. In fact, I wrote an article, funny enough, just as the George Floyd thing happened, and my own take on it was the wealth gap, the racial wealth gap, and I think I put it on LinkedIn, and I called it "Mind the Racial Wealth Gap," and it was just sort of putting the threads together about the fact that a lot of these injustices that Black people are suffering come from the fact that there's a big wealth disparity. But well, I'm not going to keep blaming somebody else for that wealth disparity. If our people, and I'm one, and I didn't grow up knowing about how to invest or all those things that some other communities teach their children much younger. So I thought, well, actually, you always have to give them the tools, get people to understand that part of responsibility to close this racial wealth gap is then they themselves starting on a journey. And if what I can do is create a platform that helps people to start that journey to wealth creation and stick to it, and not be only drawn to consumerism and buying, and which unfortunately, younger children get that bug earlier than the bug for saving and investing. So come fast forward 2020, I thought I can do this. I can do something about this and still make money, because it will be through fintech, scalable, and hopefully reach a much, much, much wider audience. And then Wealth It was born in 2020. And so I'm still sitting here working on that vision, basically.
Incredible. I mean, it's so amazing how you've just gone, this is what I want to do. This is where I can see it myself being able to contribute, and just gone for it, and being able to completely reinvent yourself kind of again and again. And I mean, I'm just in awe. It seems like an amazing place to be now. And so just to give the audience a bit of an idea of exactly how Wealth 8 works, kind of in the practicalities of things. What happens? When people
when people log in. So basically, Wealth 8 it's an app. It's an investment app. It's available in the App Store. It was launched in 2021, and literally the idea is that you, as a customer, goes onto the platform, logs in, registers, and has access to financial products managed by the best, BlackRock and JP Morgan. And basically, you've got different products, different classed according to risk, according to return, so how much money you're going to make when you put it into this product. And you can start investing with as little as £8, as opposed to the old days when a wealth manager or a private bank wouldn't take you without thousands and thousands or millions of pounds. Now you can say, I've got BlackRock or JP Morgan managing my money, and I've only got £20 a month or in there. And so it's attracting the young, the students, and even the middle class, middle age, because people who typically never saw themselves able to access, mutual funds, ETFs, and of different types. We also have an ISA, bundle. We have ESG investing, because we're conscious that many people really want to put their money into things that are climate friendly. For example, the JP Morgan product that we have on there is an index fund that has 100 different equities from climate friendly companies, basically, in there. So if you're putting your money into that, at least that it's actually ticking some of the boxes you're sensitive to, and giving you a return, because people sometimes say you can't make money when you're doing ESG investing, and I actually beg to differ. So that's what it is. You go in there and you can invest. And the other part of what Wealth is doing is also demystifying the language of investing. I just rattled off ETFs and index funds and all of that. And I realized that even don't forget that I'm not a finance professional, and I'm not a tech professional. So I felt it was even a bit easier for me to create this. I have obviously got the resources and the people in my team, but making sure all the time that the language on there was easy to understand. But we also have short articles. We have a hub, which is a financial education hub. So if you go on there, even before you start investing, there are lots of very short reads, and as we grow, we want to introduce videos and very short, things that people can just log on there. And before you even start investing, spend time playing around, reading articles. We did what we call an investor academy with JP Morgan, where again we said to JP Morgan, write the information about your products in language that Joe blogs can understand, frankly. And so that's part of what I'm very keen on, is demystifying the language of investing. Because even as a woman in my, sort of getting on in my 50s, for many years, if you asked me what an ETF was, I'm like, what's that? It's like, it's an energy company. So now I understand those things, but I realize that the language of investing has to be demystified. So we want to be able to, help people by making it easy to understand, and as well as giving them the means to invest. Definitely. And that's what you would experience, and we're continuously working on improving the iterations. And it's an FCA regulated entity. Your money is safe, and when you put your money in there, it goes straight into the hands of the investment manager. And we don't have custody of your funds, and they're managing it, and all the literature is on there about what you put your money into, what returns to expect, and you can take your money out at any time. There's no fee for redeeming, for taking money out. You can put money in on a regular basis, which is what we advocate. And as you can see, there's compound interest. You put money in and you reinvest your interest. If you leave it there, then you know that your money is growing. But it's very easy to access. And like I said, if you want to take your money out, you send us a message through the app, and the money heads back to your bank account. So you can save money and take some of it out and put more back. And we encourage people to do regular direct debits, just so that's an amount that they can sort of put away and forget about. Over the years. Absolutely. So that's the experience.
Which is fantastic. And as you mentioned, there's levels of accessibility, isn't there, in terms of, financial, but like you said, the language, enabled to be able to, use this anything. You have to know what it is, and not only where to go, but also what it means, but also, there's so many.
Absolutely. And sometimes people are embarrassed to ask.
Of course,
if you're a medical doctor and you go into the bank and you want to put your money in something, and they say like, okay, here, sign here. We've got ETS and mutual funds, and we've got the lifetime ISA and XYZ. People just sign things thinking, right, okay, it's XYZ bank, the high street bank, it's got to be a good thing for me. But even it's not a bad thing, but is it good for you? Does it match your goals? Does it actually match, your own current needs? And we want to be able to give people the access to something where they can ask this, first of all, get the information invisibly, but eventually, and this is hopefully what we'll do with your financial planning community, is to even get some, people as they get more and more, the portfolio gets bigger, to give them access almost to anonymously to a financial planner who can be online with them and talk them through what they're doing, making sure it's right for them, etc. But because you go into a bank and someone sits across the desk from you, and sometimes you don't want to tell him, even though you're very well qualified in the job you're doing, that you have no clue what a mutual fund is.
Yeah, you don't want to look stupid. You don't want to look like you don't know what you're talking about. And sometimes some of these concepts they're fairly simple. They're not complicated to understand, but it's just that barrier of, well, if you're not familiar with the language and what people are talking about, then you can't access or grow or build wealth. And so when you kind of built Wealthy and were looking to launch it, how did you approach promoting it and getting it to people who perhaps might not be up on financial
stuff?
Or just financially literate, or they're looking for something, but where do they look? What was your approach when putting it out there and trying to get it to the people that you've made it for?
Well, our approach was very much DIY, but again, using the internet digital environment and doing it digitally. So going to meet our communities in different spaces. So the communities definitely on Facebook and on Instagram, for example, and putting out content and articles and sometimes fun facts about saving and investing, etc., to get those people to because everyone's out there on some social media platform or the other. So using social media was one. Actually going to sort of interact with students. So you find that most universities have an African Caribbean Society, an ACS, and don't forget that our main target, and we're not exclusive. We don't say, gosh, if you're not skin color, you can't join. That's be silly. That'd be racist. No, we're basically saying we are targeting a community who we feel hasn't been spoken to directly in a language that they are familiar with. And so we go to those schools, to go to the African Caribbean societies, host events, and again, we're finding some of those universities are very, very bright students who sometimes have come from a disadvantaged background, might be the first person in uni in their family, and therefore have no real role model, nobody to tell them, about credit and budgeting, because they're probably, the first person to do it. And yet, so we found that interacting at that level, and these are young, very bright students who probably will end up with very good jobs because they're in Russell Group universities. And, I remember asking, questions like, what would you do with that first paycheck? And a lot of answers were things like, go on an amazing holiday, or, buy my mom a car, buy myself new trainers. And I'm like, anybody going to put money in a pension, save? Yeah. When I'm rich, when I've got lots of money, I'm like, yeah. So again, you realize that, well, no, that's not how it works.
Yeah.
That should almost be like your top 3 priority. But it's normal. If they're not seeing people around them saving and investing, then it's that's you do what you see basically. And so so that's one area we interact with people, and then just having events with different communities. For Women's Month a year ago, I found a female network of Black and Asian women who do wonderful things, but have their own network where they talk about everything from food and diet and exercise and marriage and I said, let's talk about money. So we actually had an event saying, let's talk about money. Let's have a Tupperware party talking about money and about who's got shares and who hasn't. Because again, as women, we get together and talk about those clothes and shoes but how often are we honest about how broke we are? We all look good, but we don't talk about, gosh, I'm spending way above my means. Too many credit cards. We don't tell our friends that. And I said, let's create a safe space where we can talk about those things and help each other and understand, yes, there is that yearning to spend and to acquire, but how about waking up one morning and looking at your bank account and seeing that, my God, because I put £100 away over the last 3 years, I've got, so much. And actually, it just changes your dynamic and perspective about life when you know that you've got a nest egg, you've got an emergency fund sitting somewhere. So again, those are the ways in which I reach people. We did a lot of webinars when we were during COVID. We've done less, but we'll probably do more again. But the webinars were very popular, and again, there were safe spaces. People could, I think, be anonymous on webinars, ask questions, share their challenges, and we all know that a lack of money or people who are overwhelmed with debt, it tends to be a major mental health problem. So if you can actually just get your hands around how you're tackling money, creating wealth, or even just managing to make ends, especially at this time.
Of course, yeah.
Exactly. So we're not just about bring your money and put it in BlackRock, but let's talk about the wider issue about your relationship with money.
Yeah. And have you found then, because you're obviously talking to people who perhaps aren't as familiar with this, kind of endeavor, is there an element of needing to do it face to face to build that trust rather than just being something that's online that feels, is that safe? Is it not safe? It's FCA regulated. Is that something they look for, not look for? Is it needing to actually talk and build a relationship that you found is more useful than perhaps promoting yourself digitally without that kind of human side?
I think we need both in wealth management. Mm-hmm. I mean, yes, we're talking about scaling and democratizing access by through the digital hub means, but I think yes, when it's money, people need to trust that this is real, this is here to stay, these aren't some scammers. So what we are building, or we've built, is a platform where facilitators, we're basically saying we're the platform where we'll create an environment that's easy for you to come on to understand, but the products themselves are going to be top AAA class. So this is JP Morgan, one of the largest asset managers in the world. They own the banks. They're global. And this is BlackRock. BlackRock is the largest asset manager in the world with over $9 trillion of assets under management. So what we're telling you is that, guess what? BlackRock, who manages money for the largest institutions and wealthiest people ever, is managing your 100 quid as well. Isn't that amazing? So it's the same people. And if you go online, in fact, when you sign up and your money goes straight in the hands of the investment managers, and you can actually look at their products, you can look at the trajectory of the BlackRock products on their website. So we're not, it's not us. It's not Bimpe managing your money. Hell no. It's BlackRock, JP, and we're going to add on more product providers as we go along. So that's part of, I would say, that trust and that credibility is there because we're going to be bringing to that community the best of the best already straight away. So and it's tried and tested. So people, and then of course the FCA regulatory environment. My goodness, you don't want to joke around with the FCA. So that's for sure. I'm not, you don't play. When you get that license, you're not playing, and they don't play either. Be after you. So exactly, and that also hopefully gives people that level of comfort, and that's super important. And then, I think when I tell my story and people realize I've not come from a finance background and I'm a lawyer, I'm still a practicing barrister. And my co-founder too is ex-KPMG, David. So, again, look at our backgrounds, look at who we are. Thankfully, there's integrity, there's credibility, and we're holding ourselves accountable even by doing this.
Yeah, absolutely. And I mean, I kind of want to talk about now moving into kind of the kind of side of things where it's no secret that the world of finance and in terms of financial planning, as you go to conferences, it's overwhelmingly white. Like you look out and it's just pretty stark, the image of who's in the room and more apparently who's not in the room. Yes. So I just wondered if you could perhaps talk about maybe the specific challenges or disparities that the Black community faces when it comes to wealth building and investing, and why you think this is the situation that it is at the moment.
Well, I think the situation is when I wrote that article and I really look back at the fact everything from, the US is quite bad in terms of zoning, where people grew up, where they went to school, the education that they were, Black people were able to access, all of that, and then even in the pay gap. So there's always, there's been a pay gap between, Blacks and whites and non-whites, definitely, and even with females. So there's a pay gap there as well. So all of those things feed into, first of all, people even having the access to accumulate money to invest and save. That's one thing. And secondly, I think people underestimate the fact that if you're, especially to do with things like money, and even healthcare to an extent, but money, if you are talking to someone who does not have any idea who you are, doesn't understand your background, doesn't understand your challenges, even if it's the same skin color, that would help. And usually if it's the same skin color, even if he's now an established financial advisor, chances are somewhere in his network he knows someone who's had to struggle and is still struggling and what they're dealing with. And let's face it, most of the Black community in this country are immigrants. Even the Windrush generation, frankly, are immigrants. And again, when you're an immigrant coming into a country, you're not, you don't have the old boys network at your disposal. You didn't go to school with, the chancellor of the exchequer or the CEO of Lloyd's Bank or what have you. So all of those things as immigrants, you're even at a bigger disadvantage. And of course, you come in and you're bottom of the food chain in terms of trying to work, get jobs. And most of immigrants want their children to do better. And so they're working 3 jobs, sometimes going into debt to pay for education or to pay for a better lifestyle. So I understand many of those challenges. And therefore, when we were doing the content we have on the app speaks to that. You can tell that we get it. We know where you've been, and we know where you probably want to go, because we're like you. I mean, yes, I grew up in Nigeria, but I have friends here. I've lived here for 28 years. My kids have been to school, to uni. So there's that immediate, I would say, acceptance that, gosh, this person knows me. Unlike some white guy in a grey suit, who's talking numbers at you, sometimes condescending, but even if he's not, you just can't imagine where you've been and what you're trying to do. You're trying to raise your kids, educate them here, and then you're sending money back home, whether it's to Nigeria or Jamaica or something. So, and you can't don't tell me about, you're saying you're earning that much, so you should save half. Like, are you kidding me? I'm educating my 3 or 4 cousins back at home, and educating my kids here who've got to be in private school. I want to move home, and he's like, giving me products that don't match my aspirations or my goals. So that's why, yes, it is important to have more and more people from diverse backgrounds. And I think, look at companies. The companies that have diverse boards or diverse workforces do better, because whatever they're selling, they can tweak it according to the audience. They will know their audience better. Do you see? So that's a challenge that's there for sure. But the wealth disparity, there was a report I read during all my research. It's called the Runnymede Report. We did some research in 2020 that said that actually showed that for every pound that a black family has managed to save, a white family has 10 pounds. That was in 2020. That disparity, it was there, and probably to an extent, it's probably even as worse now with the financial crisis. So the tendency is that black boy, they was more likely to drop out of school, more likely to enter criminal gangs, stop and start. All those things just are challenges that those families have to face. And if one gets out and gets to a good university because he's smart, who is there to give him that knowledge, that support, that accessibility to say, don't get that credit card and then go crazy because you want to show off. Yeah. But actually, let's be sensible, because he probably doesn't. His friends are egging him on to buy the best shoes and whatnot. So that's the ecosystem that I know we're in. But at the same time, people of color value education, value good homes. We want to all have the best for our families. We all want all the things that good money can buy, and yet sometimes even getting access to credit for our businesses. And I can share with you, even getting funds for entrepreneurs, fundraising is harder. I'm a black founder. I can tell you, raising money in this environment is doubly hard when you're in minority from a VC or PE. Look at the numbers. The amount of money that is going to black founders is like 1.5% of what's our equity capital that's going into new business, businesses founded by entrepreneurs in this country. So it's all along at every sector, but we just have to keep going.
Yeah, and I mean, it's things like that is hopefully going to keep pushing the dial in the right direction, because absolutely. I mean, we're not anywhere near being,
totally equal.
Exactly, and it feels so ridiculous as well that this is still a conversation that we're having to have. I actually can't believe it. And
you're right.
You read those statistics and you go, what is going on? And do you feel then that technology, and to an extent maybe social media, is a tool that is going to help as well? Do you think there's a lot that could hinder people who are looking for easy, quick advice or trying to make a difference? Because I know there's a lot of bad advice out there on social media as well, and if it's not regulated, perhaps it's to its detriment. But overall, how do you see technology and social media? I guess they're two separate things, but one and the other.
They kind of are in the same space. I mean, I see technology there's so much that you can do that's good, but with everything can be abused. But let's talk about the good. The good is scalability. Good is people can access. These days we do our banking online. You don't have to get up and catch a bus, catch a train to do certain things. You can work from home, better quality of life. So technology is good, and I think in the same space, wealth management is already been disrupted by technology, because now you can reach, and I'm not the first. Like I said, the likes of Nutmeg have gone before me, and they're reaching a much wider audience, and therefore even bringing the cost down. Because also when you're trying to build a portfolio of savings, usually your bank is going to charge you an arm and a leg for setting the portfolio up, and then different funds have different charges. But the way we do it, for example, we have one flat fee of 1% across the board for coming in, and it's charged on a pro rata basis annually, and that's it. But no fee for exiting. So with technology, because the idea is you have economies of scale, more and more people, you can actually bring the pricing of things down, and that will help in the wealth management sector. With technology as well, what we are trying to do also is even do more by even using some tools like AI in a responsible way to help some of the customers actually build a financial plan. Because it's one thing to, and I would say that it's not something that is for all, but if you have very clear goals and a clear idea of where you're going, and you have a clear set of information, and you feed it into a good AI portal, at least the basic pillars of a financial plan, which will tell you, right, in 5 years' time, you want to buy your first home, then maybe you should invest. You could be investing in a particular product at a particular return, which will get you that. And based on your salary and what you earn and what your disposable income is, perhaps you should have enough. You should be able to afford to do this to get you where you're going. So if we feel that if we can actually, which is something, for example, until I was much older, I didn't have a financial planner. I was just sometimes in the dark. I'm going to do this, but how do I get there? And I need 50K to put a deposit down. I mean, probably 10 times that now. but but you realize that when you're 21 and you're saying, oh God, I'm going to need 150,000 to put a deposit down. But yeah, if you start now, in 5 years' time, based on what you're earning, and you have a decent job, you could have that. And based on where you invest the money as well. And someone told, because usually people don't do that, and then 5 years later, they're still where they are. They haven't saved a penny, nothing's moved. They're still moaning about, I can't afford it. But really, if your financial planner had sat down with you and done some, fact find, and was able to tease out based on what you want to do, and even help give you a reality check, because sometimes people over plan or have shorter timelines to do something that's very ambitious. But just so we want to add that feature, and we're going to hopefully get that out next year. A feature on there that will help you to do some basic questions, have a basic plan. But to be honest with you, in wealth management, you need a hybrid. You need to use tech, but you still do need. I think wealth management is one area where technology can't take over totally from the human touch. You do need to speak to someone, because no two stories are the same. There is always going to be that when you're doing the fact find. The person might tell you their salaries and their this and that, but maybe they haven't actually put in enough fact find that they have a disabled child, and and there are other issues that perhaps are a draw on their finances. But someone sees their salary, and oh my goodness, you got that much money, you'll be fine. And so, but having the human touch who can sit with you, and again, you can do it online. Unlike when a financial planner can probably see more customers, more clients online in a day than if they had to sat in an office and someone has to catch a train and a bus. And so technology is also increasing our efficiency in serving that client base. And definitely social media is what it is. I mean, I think people take everything you see there with a pinch of salt. There's fake news, and there's fake facts and fake promises, and but I think if you have a decent sort of plan and you have someone to give you some guidance, hopefully you can stay real, keep it real.
Yeah, absolutely. And so obviously our community of financial planners and people working in the financial planning profession, what can they be doing to help close this wealth gap?
Absolutely. Like I said, it's I think it's not incumbent on everyone who's a financial planner to really try and just have an attitude of diversity. in how they advise people they see, and recognize that, and maybe even ask deeper questions when you're getting to know and do the fact find, because of course there are also issues around, whether gender issues, access to credit for people who are trans. There's all sorts of different, I would say, challenges that people are facing these days. And I think as a financial planner, you need to just be very much more aware of what those challenges could be, and give your clients that safe space to really express themselves. You can't, no two clients are alike, and definitely some clients are carrying a heavier burden than they're letting on, and therefore your advice may just be wrong advice, because you haven't actually given the client the benefit of really opening up. And sometimes I find that when and I say that from my own personal experience, even in the past, that I sometimes, looking at the financial, the planner is a bit like a coach. They need to have more empathy. You look at the person, and the person is all very dried and hot and dried, and you can't sort of share that extra something that you're anxious about, or something that's happened, or something that you just can't get your head around. And so a financial planner needs to be, I would say, a bit more empathic with the client base. And then, just like I said, be aware of the diverse challenges, and hopefully build up a diverse book of clients. I think if your book of clients is too homogeneous, then you need to be questioning why you're doing this. Is it just for the money, or is it really to make an impact in people's lives?
Yeah, for sure. That's great advice. Okay, so then looking to the future for you, then, what are your long-term goals, aspirations for Wealth 8? What do you envision happening? Where would you like to go with it?
Right, so we're 2 years into the app. Was launched 2021. It's 2 years old. We're in our seed fundraising round. Of course, for any founder, access to capital, and this is a long game, so it's not a quickly profitable. We're not selling shoes or whatever. It's not a quickly profitable business. So really having access to capital would be great. But if in my long-term vision, and I say long-term in these days, is probably my 5 to 10-year vision, is really growing the community base, and really having an impact, seeing people use the app, sitting on a bus or a train, and someone sitting on their phone and maybe checking their portfolio, and it'd be Wealth 8 app would be amazing, for sure. And basically maybe hearing stories of people who have been on the app for the last 5 years and saying that it's actually worked for them. And definitely, we're looking at heading onto the African continent, because there is a wealth gap there. There's a wealth gap on the continent for different reasons, but there's a wealth gap between the continent of Africa and the rest of the world. And part of that, again, is because even though we're a very young continent, the average age, in fact, more than 80% of the continent of Africa are below the age of 25. So they're an amazing workforce. There's amazing entrepreneurial people. I mean, I'm from Nigeria, and that's exploding. But again, even when people work and save the money, they have still limited access to some of the interesting financial products that we have, in the UK or the US. Even access to investing on the stock exchange if they're sitting in their country. And that shouldn't be. They shouldn't have to leave their country to be able to save their money and, do more long-term planning. And so part of what we're doing is trying to, again, dismantle the barriers. And some of the barriers are just these traditional, what we call KYC barriers, that people say, oh, Africa is high risk. Oh, we don't want money from there. I think people should realize that you can filter. And these days, first of all, with technology, and secondly, even those countries are all, becoming more cashless, using technology to basically filter the good from the bad. And so we're working with banks there to, find ways to be able to onboard. We'll probably do it as a B2B service, but be able to work with one of the banks and asset managers there to onboard some of their customers onto our platform, because we feel that that would give those people on the continent more access to wealth creation and long term, because because they don't have access, their wealth creation abilities are behind the rest of the world, and therefore that wealth gap is, again, between the continent of Africa and the rest of the world is widening, and all because of very, I would say, stereotyped opinions and attitudes. So we're trying to dismantle some of that as well.
Sounds fantastic. I can't wait to see what happens. I've got 2 more questions for you before I let you go. And these are 2 questions that we like to ask everybody who comes on the podcast. And the first one is we like to ask our guests for a book that has helped them in their career so far. So do you have a book in mind?
I do have a book, and I still debate an out of it. It's called Grit. It's called Grit.
Yeah.
It's by Angela Duckworth. Grit is basically talks about resilience, talks about just showing up and just staying focused, because nothing is easy. I mean, I think part of the book's message to me has been, first of all, it's mind over matter. I mean, like I said, I'm not a finance professional. I'm not a tech or engineer or anything, but I had an idea, had a concept, and thankfully I've had the focus to stick with it. So sticking with it, showing up is, in fact, there was a quote I keep tell my young children that says, 80% of success in life is showing up again and again and again. And just, the book talks about, how many gym memberships have we all started at the beginning of the year, those resolutions, to do this, it's better, X, Y, and then, at the first hint of challenge, we just give up. So, and I would say the same thing with saving money. Sometimes you're saving and investing in different products, and something goes wrong, the market is volatile, and you say, oh God, okay, you know what, I'm just going to take all my money out because I can't do this. And yet, sticking with everything. So that's what that book has taught me, and I still use it as my sort of Bible. So it's called Grit. It's a great book.
Sounds fantastic. Brilliant book. I will definitely check it out. Final question. It's very wide, big question to ask. And that is, what are you most excited to see in the world of finance in the next 10 years?
Skill. I mean, like I said, disrupting the fact that wealth management is no more just for the wealthy. I think technology is changing that totally. And in fact, we now see that the next generation of wealthy people, the inheritors of wealth, don't want to go sit down with some boring banker for hours on end. They want to have it all on their phone. They want technology to help them to navigate wealth creation and their wealth preservation. So technology is doing a lot, and I'm hoping that we're playing our part in disrupting who accesses wealth management and who understands it and who benefits from it. And I think technology and AI to an extent is doing that. I'm excited to see where that goes.
Yeah, me too. Absolutely. Well, it has been a pleasure, a joy talking to you, Bimpe. Thank you so much for
Amelia.
coming on the podcast.
Thanks
it's been
for having
a pleasure.
me.
Thank you.
Thank you.
That was Bimpe Nkontchou on the NextGen Planners podcast. If you enjoyed this podcast, then please do share it on all our social media platforms. You can listen to past and future episodes on Spotify, Apple Podcasts, Google Podcasts, and on our website, which is nextgenplanners.co.uk. There you can find loads more information about our brilliant community. Finally, if you can, do leave us a review. It does help to grow the podcast so we can get it out to even more people. Thank you very much.